Are you using your business account to pay personal bills? Or maybe you're using your personal card to buy things for your business. If you're doing either of these, you could be making your bookkeeping much harder than it needs to be. Many small business owners mix personal and business expenses because it seems convenient. But what looks convenient today can create financial confusion later. In this video, let's look at why separating your finances is so important. What does mixing expenses mean? Mixing expenses simply means using the same bank accounts, credit cards, or payment methods for both personal and business transactions. For example, imagine you run a small business and use your business debit card to pay your personal electricity bill. Then you use the same account to purchase business supplies. At the end of the month, you now have personal and business transactions sitting together. Your bookkeeper has to figure out which expenses belong to the business and which ones don't. The more transactions you have, the more complicated this becomes. The first major problem is disorganized financial records. When personal and business transactions are mixed together, it becomes harder to know exactly how much your business earned and how much it actually spent. You may have to go through dozens or even hundreds of transactions just to identify which purchases were business related. That wastes time and increases the chance of mistakes. Good bookkeeping should make your finances clearer, not more confusing. Problem number 2. You may misunderstand your profit. The second problem is that mixing expenses can give you a distorted picture of your business performance. Let's say your business account shows $8,000 in expenses. That sounds like a lot. But what if $2,000 of those expenses were actually personal purchases? Your business expenses aren't really $8,000. They're $6,000. If you don't separate them properly, your financial reports may not accurately reflect how your business is performing. And you can't make good business decisions when you're working with unreliable numbers. Problem number 3, tax preparation becomes more difficult. The third problem is tax preparation. When tax time arrives, you'll need to identify your legitimate business expenses and keep appropriate records to support them. If your personal and business spending is mixed together, determining which transactions relate to your business can become a major headache. You may spend hours reviewing bank statements, searching for receipts, and trying to remember what each transaction was for. Keeping your finances separate throughout the year makes this process much easier. So, what should you do? Start by creating a separate bank account specifically for your business. Consider using a dedicated business credit or debit card for business purchases. When you receive business income, deposit it into the business account. When you have a business expense, pay for it from that account. And if you need to take money from the business for personal use, record it properly rather than simply treating it as another business expense. Most importantly, keep your receipts and financial records organized. Remember, separating personal and business expenses isn't just about making bookkeeping easier. It gives you a clearer picture of your business, makes financial reporting more accurate, and helps you stay organized throughout the year. So, if you're still mixing your finances, start separating them today. If you found this video helpful, kindly like, subscribe, and follow for more simple bookkeeping and accounting tips to help you manage and grow your business.